In this video, I'm going to explain everything that you would ever need to know about stock lending on Robinhood. And while I'm talking about specifically Robinhood here today and showing you examples from inside that account, pretty much what I say will apply to wherever you can enable stock lending, even if it's with another app. Now, in the past, I did make an overview about stock lending, but this is an updated and more detailed video really answering specifically the questions that you guys had and you wanted to learn more about. So by the end of today's video, you should know everything you would possibly need to know to make a decision about whether stock lending could be right for you or if it just doesn't fit your investment style. There are three big things that we're going to focus on today that you guys told me that you want to learn more about on this topic. The first big one is how stock lending actually works and why people out there would want to borrow stocks from you. The second is the risks. It kept coming up. How risky is this? Is it worth it? Well, there are three risks that you take on if you decide to participate in stock lending, and we'll break those down as well as how risky I actually feel those are. And then finally, I'll give you a real life example of how much money you could expect to make if you decide to enroll in stock lending, then kind of tell you where I'm at and what I'm personally doing as it relates to stock lending on Robinhood. All right, starting from the top, what's stock lending? Why do people even want to borrow my stocks? And why would I get paid when someone else borrows my stocks? Let me explain all of that here. First of all, before stock lending, there were two ways that you could make passive income from investing in the stock market. That first one was if the price of a stock went up compared to when you bought it and then you sold it, you take the difference in between. The second is through dividends, and most people know that dividends are just paid out regularly, usually in quarters, for simply holding an investment. And it's an awesome, easy, efficient way to make passive income. But then stock lending comes along. And this opens a third door that you can make money passively just from owning stocks. So enabling stock lending is allowing Robinhood, giving Robinhood permission to go out and find borrowers for the stocks that you fully own. Note, these are not stocks that you bought on margin. These have to be completely, fully owned by you. But if Robinhood does, you'll be paid interest for every single day that that stock is borrowed. Now, I know that's just the what, and it doesn't explain how or why people would want to borrow stocks. So let's talk about that right now. There are essentially two reasons that people out there want to borrow the stocks that you own. One is big investment funds and brokers trying to settle trades and keeping the market liquid. The second one is a little bit more sinister, and it's people wanting to short sell the stocks that you own. It's people making a bet that the stock that you own will actually go down in price, and they want to borrow it and resell it at a lower price, guaranteeing that they can make money in the transaction. Now, to actually borrow those stocks, and this is where you find out why you get paid, every day that someone else borrows your stocks, they've got to pay interest for the right to keep holding that. And they pay interest until they resell that stock. So they're betting by short selling your stock that it goes down, but the whole time they're making that bet, they've got to pay interest back to you and to Robinhood for allowing them to do that. Now, I can understand if the first thing that you say is, one, this sounds complicated and a little bit risky. So what's the deal? Is it actually? Well, I'll tell you, first of all, it is very complicated. The process of finding stocks to borrow, Robinhood matching them to people who want to borrow them, you lending them out, like a lot of things in finance, it's done all computerized and behind the scenes, and you don't even really know what's going on. But yes, it is complicated, and that's the reason that you're paid for allowing your stocks to be lent, and that's the reason why Robinhood takes some of that payment too, for working the scenes and running the computers that allow all of this to come together. But is it actually risky? Well, that depends on who you ask, but I'm happy to give you my thoughts and explain the three major risks that you put yourself out to when you decide to enable stock lending. So as you think about these three things that I'm about to explain, what you have to know is that you're still fully in control of any stocks that you decide to lend out. Your screen will look exactly the same. You can buy more, you can sell off your positions just as you normally would even with stock lending enabled. But even while you can do that, there are still 3 trade-offs to know about. The first trade-off or risk that you take on is you're now unable to participate in shareholder votes while you are lending your shares at. You pass that right off to the person who is borrowing your stock, and they're the ones who are able to actively vote. Now, in my opinion, how big of a risk or trade-off is this? For me, and 99.999% of the other people watching this video out there, they're just not big enough stockholders to really make an impact in any of the voting process. So while it is a negative, I guess, it doesn't matter in the big picture. So let's look at risk number 2. Risk number 2 is a little bit bigger. Dividends that you make from your stocks being lent out are now taxed as ordinary income, which means this ordinary income tax rate could be and probably will be for you at a higher tax rate than a standard dividend coming into your pocket would be when your stocks are not getting lent out. Now, there's one more risk that you take on when deciding to loan out your stocks, and this risk is you lose your SPIC protection that Robinhood offers with your traditional stocks that you own. SPIC protection is an insurance that essentially guarantees you up to $250,000 of reimbursement should Robinhood go belly up. Now, this is certainly unlikely, but it is not impossible that your broker goes belly up, especially a newer one like Robinhood. Again, this probably won't happen, but it's standard government insurance essentially protecting you through no fault of your own if the app you're trading through goes bust. Now, Robinhood says they have a solution to this, and what they do is they keep collateral in a third-party bank equivalent to the total amount of dollars that are out there being loaned in their platform. So should they default on their obligations and really cease to exist, you would still have a way to be made whole. Now, I think it's fair for you to question whether you'd actually get all of your money back, but at some level, you are trusting Robinhood a bit since you don't have SPIC insurance protection on your assets. Okay, that last section and the 3 risks you take on was a little negative, but I think it's important that you seriously consider those before making an educated decision about lending your stocks out. Now, even given those risks, if you're still considering wanting to make a little bit of passive income loaning out your stocks, well, let's see exactly how you do this on the Robinhood interface. And then let's dive into the fun part, looking at really how much money you can make stock lending. The first is going to be diving in with your smartphone and showing you how to enable stock lending on Robinhood. This is really a simple process that I want to walk you through, show you so you can follow along with your smartphone. The first thing you're going to do is go down to the bottom corner and tap on your profile icon. From there, you'll go up to the top left corner where you see 3 tiny lines, and you'll tap on that to get to your menu bar icon. The next thing you'll look for is investments. It should be the first block on your profile. You'll tap there and you'll scroll down to stock lending. At that page, you can go ahead and enable stock lending. And this is actually the same exact path you take to get back to see the progress of your stock lending and how much you've made in total if you decide to turn it on. You'll see a screen that looks like this screenshot here that shows you as Robinhood keeps track of your total profits from your stock lending progress. All right, now let's examine a real life example of how much you can make stock lending on Robinhood. The first thing to know before you hit that button is not all of your stocks are going to get loaned out. And then when they do, not all stocks will make you the same amount of money. This is because, as Robinhood says themselves, stock lending is demand driven. This means that stocks that are less popular or maybe they are in short supply are going to be in higher demand on the stock lending market. And for those stocks, you'll be paid a lot more if someone wants to borrow them. For the most popular stocks like Google or Ford or Microsoft, those are going to be very common stocks and often not hard to find. So if someone wants to borrow them, you're not going to get paid a lot for being the one to lend those out. So keep that in your mind and know that if you own a lot of the most popular, biggest stocks out there, they may not get lent, or they may be on the lower side of the value scale if they're actually lent out to someone. So we're going to look at the finance blog, and shout out AM22 Tech for posting this example. And this is a user who has lent $114,000 of his account out to be potentially borrowed through stock lending on Robinhood. Now, this user lent his portfolio of about that size for 7 months. And as you can see in the screenshot, he made about $17.50 in the most current month, and over 7 months made a total of $133. And this is a user, again, with about $114,000 in their Robinhood account. I've done some research, and this blog post is pretty typical, actually. So the first thing you should know is you're not going to get rich just from stock lending. It is simply a third and the smallest way to earn passive income from owning stocks. The second thing to know is, considering the portfolio size, that gain as a percentage of his portfolio is very, very minuscule. So if you're working with a much smaller portfolio of stocks to be lent out, you can expect even smaller gains should you go ahead and do this yourself. It's all proportionate, so make sure to keep that in perspective about setting your expectations for what you yourself may be able to make. So now that we've looked at this from pretty much every single side, let me give you my personal opinion about what I do and how I feel about stock lending. I see stock lending overall as a very low risk activity that also results in a very low potential reward. The biggest thing to understand is that how effective stock lending will be directly tied to your type of style as an investor. Let's use myself as an example. I like to invest in ETFs, and if I do buy individual stocks, I mostly focus on the biggest blue chip companies or a few stocks that I feel really, really strongly about, but those individual stocks make up a tiny percentage of my portfolio. For me, being mostly ETFs and blue chip stocks, those stocks, they just don't get lent out, and when they do, they don't command a high interest rate that could come back to me in the form of payments. So in theory, it's not going to be an effective way for me to make money. Now, my portfolio is going to be different than your portfolio, and understanding that if you're investing in riskier stocks or stocks with a higher type of demand on the stock lending market, you could actually make some money, not a lot of money as we saw from that example, but you could make some money passively while taking on what, in my opinion, is a very low amount of risk. Now, whether you want to do it or whether you don't do it probably won't affect your financial future really at all. But if you've got a bigger portfolio and you want to try to make $10 to $20 a month doing this, well, more power to you. I'm interested to hear what you guys think about this feature. If you do it, if you've had success, I'd love to see some testimonials about how much you've actually made. Maybe some of you have had a lot more success in your portfolios than what most of the research that I have found has shown. If you're thinking about joining Robinhood, you can use my affiliate link in the description of this video, which will help support the channel and also potentially earn up to $200 in a stock when you open your account. Thank you guys for watching, and if you're looking for more detailed descriptions of maximizing your finances on Robinhood, go ahead and watch one of these two next videos.